Hello, I'm Ed Kelly. Before we begin the next session of Pulse, I want to take a moment to acknowledge the many insurance regulators who have joined with us to help modernize the compliance process. Their guidance and engagement has been instrumental in the development and application of new technologies, like our Open IDL, Clause Library, and our AI initiatives. In fact, let's get a quick update on those efforts from our host of our next segment, Robin Westcott. She's head of AAIS Government Affairs, Legal and Compliance. Hello, Robin.
Hi, Ed. Thanks for the opportunity to come back and talk to our members and our industry participants about some of the regulatory interaction we're having.
Yeah. Well, what about a quick update on those engagement with our regulators? I guess it goes beyond engagements. It's now in many instances partnerships.
Correct. And that's one of the things I think that's so valuable about the AAIS experience is that while in some circles and some institutions, there's always this constant conflict with the regulatory circle, our role really is to help bridge the gap between the members and the regulatory community. And some of those efforts have gone toward projects around incorporating machine learning to some of our regulatory participants. The state of Connecticut and the department there have participated with us on a proof of concept around first level reviews of some of their checklist forms using an AI tool, and we're proceeding very well with that. So thanks to George Bradner and the Connecticut department for the work that's going on there, and Commissioner Mays. Blessing on going forward. And then we have other states like North Dakota and California and that are interested in looking at having their own nodes in the Open IDL network, which distributed ledger technology will mean a great deal for the regulatory transparency that's needed for the new products in the future. So thanks to all of those that are working with us on those proofs of concepts and in other areas around the Cannabis program, acceptance and moving forward. The state of Arizona has been great to work with. So thanks to our partners out in the regulatory community for helping AAIS to bridge that gap.
Great. Well, you've got a lot going on. We want to circle back with you in the future on getting updates on those initiatives. But right now, you've got a terrific session upcoming. So it's all yours.
Thanks, Ed. Today, I'm very fortunate to be joined by an old friend in the insurance industry, he's a recovering regulator just as I am, Pat Hughes with Faegre Drinker, who's coming on to talk to us about the Capitol and what's happening in Washington. Maybe a little different perspective than some of our other guests. But I've known Pat for a long time, and he's one of those people that always has such an even hand and a great perspective as to what that federal state regulatory environment is going to look like for insurance compliance professionals especially, but more generally throughout the P&C industry and the entire insurance industry. So thanks, Pat. We really appreciate you coming on and talking to us today.
Good to be with you, Robin. It's a great program, and proud to be a part of it. And hopefully I can live up to those expectations. I'll give it a shot.
You always do. So let's just get into it because we have a lot of things, and I think probably a different perspective than some may have. Again, I think you're in the business of helping companies to be successful from an advocacy perspective, and you are very active in the DC arena. So what is the election results? What do those things look like from your perspective for the insurance industry?
Well, good place to start, and there's a lot of different ways to answer that question. I mean, let's start at the obvious, just as a foundation. I mean, we have a new administration, a change in parties to a Democratic White House, a new President Biden, and at the same time, we have both houses of Congress switching over to the Democratic Party. So this we all know. But so there's certain assumptions, that kind of baseline fundamental assumptions that we start from, that there's going to be an increased appetite for regulation generally, more emphasis on the federal role, traditionally a little bit more of an appetite to take a more active role in insurance on the Democratic side of the aisle than you would necessarily see on the Republican side. That's not always true, and it's dangerous to generalize. But as a baseline proposition, potential for legislation coming out of Congress, but we also see and have already seen the ability of Congress to push the executive branch a little bit. And early on, even before the outcome of the Georgia Senate election, which flipped that chamber to Democratic control, we saw Maxine Waters, the chair of House Financial Services Committee, issue a very detailed memo urging the Biden administration to tackle a few things on the rulemaking front or on the enforcement front. And so they were not shy at all about trying to push the executive branch. So even if you think, well, is X, Y, or Z legislation really going to make it over the wire? And we'll talk about some of those specific arenas where that question is going to get answered at some point. There's still the ability to have pressure, to have oversight, to have subject matter hearings, or just to lay down a marker to say, hey, if as a member of your team, we're really urging you to push in that direction. Now, of course, it's still a state regulated activity, insurance is, and so that's also the baseline. And so a lot of the changes that you see in federal government tend to be event driven. Something will spark an examination, a reevaluation of policies, and then we're off to the races. I think the one thing to keep in mind, and it's an awful big thing to keep in mind as an afterthought, is the narrowness of the majorities that are in both houses of Congress, in particular the Senate. And the related to that, obviously, is the really strong Republican performance in the 2020 elections. So it was a big night for the Republican Party if you set aside losing the White House and losing the Senate, which are pretty big things to set aside, I acknowledge. But nevertheless, retained incumbents at the governor's level, no major pickups at the House level. The House Democrats underperforming against expectations. The list goes on. In the state houses, there was a expectation, or at least a hope, from National Democratic Party that there was going to be some pickups, and instead the opposite actually happened. And so it's a kind of a strange scenario. Where the rubber really hits the road on that scenario is in the Senate, right? And so there's a 50-50 split, as we all know. That tie is broken along party lines by the vice president, so that yields a Democratic control. But we've already seen the phenomenon with Biden's nominee for the OMB, Director of Office Management and Budget, which is really a presidential C-suite, right? That's a big national, far-reaching job, where the Senator Manchin from West Virginia has already put his marker down, which puts her nomination in peril. So we're already seeing the phenomenon that narrow majority means that the Biden administration and the left are not really going to have the sort of free reign that you would anticipate if you just said control both houses of Congress, control the White House, pass the bill and get it through. You're just haven't, we're not going to see it play out that way on certain votes. On others, we may, but the fact of the matter is there's a centrist group of senators, about on each side of the aisle, depending on how you count, that are really going to control that line of scrimmage. And it's just, to me, it's fascinating that we're already seeing that happen with the OMB nomination. And so that kind of sets the scene, at least from our team's perspective, of what the federal outlook is and what kind of activity we can and can't expect as a general proposition.
Yeah, you and I were speaking earlier in the week when I was giving you my Florida perspective, and we talked about how popular some of the governors are right now, and so there's that pressure too, where you have some very popular Republican governors and state houses that are still controlled, large states in the Republican control. So there's that conflict as well. I mean, you see our state, our governor, who is not shy from controversy either, and generally makes the evening news in some respect or another. And he's certainly I think he's potentially a candidate for 4 years from now, and I can't even imagine why we're talking about 4 years from now. But those are the types of the conflicts too that we'll see on the state to federal level that I think will also kind of keep a balance, as you were discussing it. As some of the other governors are in that same position.
You're right, Robin. There's actually Politico ran a story this morning on DeSantis' standing inside the Florida Republican Party, and popularity general. There were a lot of close races in this most recent class, right? So with DeSantis, DeWine in Ohio, certainly the Georgia race close, Wisconsin race is close. The fact of the matter is, and so you look at those numbers, the Florida number, I believe, was below 1% in terms of the DeSantis victory. But the reality you have to recognize, so you look at those from the party's perspective, either side of the aisle, right, looks like the target, and maybe it is. But the fact of the matter is they're now incumbents, right? They have a record. They've been in front of the voters. So it's a completely different race. And I think one of the things we've seen is that from both national parties' perspectives is they will both acknowledge freely that incumbents have become popular. COVID has made incumbents popular. It's raised the profile of governors. And so some of these close races that we had a few years ago, you get no way to predict at this point. To your point, it's a long way away. But, that incumbency factor is going to be big. There's a lot of popularity. And you're absolutely right. And so how that whole dynamic comes together, I guess just the theme here is it's just a little bit more complex than saying, here's the Democratic control of the federal government and let's just see what happens next. That's just really not the way it works.
Yeah. And as we're talking about that, so how are some of the more specific ways that you see this administration really directly impacting the insurance industry?
I think that there's a few ways that are the most direct. And a lot of that is picking up on tools that were put into place through the Dodd-Frank Act in the wake of the financial crisis, of course. And for the most part, Dodd-Frank left insurance to the states after a long discussion in that regard. And there's no notion that that's going to be disrupted. But there were tools in place in the wake of that create a real targeted federal role. And so that's what we're really looking for as the Biden administration starts to fill out, what are those tools? How do those tools how do they lay their hands on that, right? So for one, right, there's the Federal Insurance Office, which is an office inside the Department of the Treasury. Really, for the first time in Dodd-Frank, there's a federal official whose day job is insurance. And they have some specific authorities that can translate to regulatory impact, like the international covered agreements, a few other items like that. But generally speaking, they're more in the lines of being able to push policymaking discussion and use that bully pulpit. And under the Obama administration, that was used a lot. And so we're looking to see that pushing states a bit on climate, on race, on anything that is a keystone issue for the Biden administration. We're looking for that Federal Insurance Office to, over time, more and more push the states, push their peers in the federal world, and really try to set the agenda. Certainly, Secretary of Treasury and the Financial Stability Oversight Council, they have an awful lot of similar authority to set the tone of the debate, but also ability to push the regulatory conversation through, a so-called activities-based approach to systemic regulation, which means that they can at least start a discussion in the insurance world over whether a certain set of practices in the regulatory world ought to be changed. And we also see international standards setting. That's a big deal. And that sometimes can feel far away to the day-to-day, but the reality is that international standard setting has given us, ORSA has given us group capital. So those things have the potential to impact not just the biggest of the big companies, but really the whole industry. So those are some of the things I think on the areas where we're really going to see the activity is where insurance lines up with a core goal of the Biden administration. And they're not going to sit back and wait for those connections to appear. My suspicion is they're going to be actively looking for them.
Right. And we had a very active FIO director and Director McGrath when he was there in basically an inaugural role at the FIO. And I mean, the world didn't end, right? He was very present in many of the discussions and pushed some of those issues forward. And it was something that, where the state-based regulators had to make more of an argument and case for themselves. But him coming from Chicago as a former commissioner had a little more insight into that. But the state-based regulation will just be in a position where they have to defend themselves a little bit more, stand up. But it doesn't mean that they won't be present, right, for the discussion. And I think that's important to remember, is that for these issues that come forward, whether it's around the general impact from an international reactions and things that are happening at FSOC and other places, I think it's really important to remember that the state-based regulation is still a very powerful voice and will be present to make a lot of those arguments. They've been successful in the past, and I expect that they will be present and somewhat successful in the future, regardless of how much one party or the other wants to lean into the change in state regulatory politics, so to speak. But looking at that right now and looking at what are the priorities in DC, and what are some of those, how are some of those priorities going to impact directly some of the insurance issues that we're seeing?
Sure. Well, the number one day job of DC right now is the COVID stimulus package. That there's been a lot of work done on that. There's some work that's coming up down the pike. There's substantial activity in committee markup, and now the larger committees need to essentially pull all these packages together. That's going to happen over the next week or so. It's anticipated that that's going to be a party line vote. They're using this process called reconciliation, which is related to the budget process. It's it's an arcane type of, deep in the procedural weeds. But what it really means is they can do it with a simple majority. So that obviously is key because of the narrowness of the majority. So we're going to see that COVID package, when that comes through, which seems to be sailing through anticipated to come through. Until that happens, there's really no oxygen in the room for much else. That really has to happen, and that has an impact on all businesses, right? And one of the key things folks will be looking for is, to what degree, the minimum wage is one of the, within the Democratic Party, the point of controversy as to whether that could make it through as part of the package, and whether procedurally they could put it in as part of the package. So that's kind of one of the, to call it that a biggie is a bit of an understatement, right? And it's $1.9 trillion. Rob, remember when that was? It's not $2 trillion, because that's a lot of money, right? So it's not two. It's merely a $1.9 million package. I am old enough to remember when that was actually, even for government spending, was a big number. But I guess times have changed over the last couple of years. So that's kind of first up. So that really applies to everybody. Infrastructure is the next biggie as well. Not to talk about these things as if they come in lockstep is silly, but just in terms of general priorities, is some sort of an infrastructure package. The administration is very interested in pushing that forward in general because of the severe infrastructure needs in the country. However, there's more to it than that, because infrastructure now ties more closely to climate change and to racial justice, which of course are also priorities of the Biden administration and priorities of the human community, right? But we're seeing that as such a high on the priority list that everything gets looked at through that prism, and infrastructure is the same thing. Now, tie into insurance, obviously insurers want good infrastructure. Everyone wants good infrastructure, but there also are potentially investment opportunities in infrastructure that I know they're sort of tilted more towards the life and health side because of the greater need perhaps for longer term investment and asset liability matching. But nevertheless, I think throughout the insurance sector, there's interest in, are there private sector roles in these infrastructure projects that could create investment opportunities and opportunities to, and at the same time, do some good, right? To address issues like transportation equity, to address issues, like climate and green energy. And a component of that, which I know is near and dear to your heart, Robin, is data. Right? We tend to think about infrastructure the way maybe we thought of it when we were in junior high or what have you, right? Which is a road, a building, a bridge. Of course, all of those things are still there, but now more and more we're talking about data and the infrastructure and architecture that's around that as part of the
Yeah. Yeah, and Pat, I think that not from just an financial investment standpoint, I think that's where insurance companies could invest that in a much more significant way from just aligning themselves with. Look, I believe that this industry does great things, and we support our economy. If we use some of the data that we have and we start building infrastructure, and that is supportive of what some people consider to be futuristic type things, but quite frankly, it's coming on us so fast. One of my fellow AAIS leadership team members loves the idea of flying cars. He talks about it all the time. That's really not that far out of our reality. We're already starting to see drones in the economy, different types of things. There are going to need to be different insurance products that support that. There's going to need to be an investment from the insurance industry around the data that they collect to start helping support and magnify this new infrastructure as we see it. And I think that's another really significant way that insurance companies can start to not just invest from a financial perspective, but invest from a people perspective and from a infrastructure and strategy perspective. Because if we start turning our data a little more outwardly around helping to create those environments around new roads and new types of transportation and these new things, but we use it to help our customer be able to navigate it and to insure against that risk, and to deploy just basic risk management, even to the personal level, on what they're interacting with. I think that's a great place for the insurance industry to focus efforts as well. So I'm excited about that. I know another thing that you and I really had talked about in this is around the climate and resiliency issues. And so what about, how do you see some of those, the climate change issues from the federal to the state level kind of impacting this work?
Yeah, and there's also an international angle as well. Really, everything is, climate is one of those issues that is pulling in an awful lot of energy and relates to so many other issues. We already touched on an obvious one, right, which is infrastructure. So, but climate again, very, very big push. One of the first actions of Biden as president was to sign a very far-reaching executive order on climate, which obviously didn't go into every detail of what their plan is, but was kind of laying down a marker and setting in place some very specific initiatives in that regard. So we're going to see more activity. We're going to see that show up in any infrastructure proposal. We're also just going to see it show up as a policymaking issue. But the tie-in, the regulator, I think, maybe of most interest day to day for many in the insurance industry, what is the regulatory push that's associated with that? Interestingly enough, just today, I know we had the DeSantis piece today, and I think yesterday Secretary Yellen made a statement that was relevant. So they're all helping me here by having some new interesting things to talk about. So Secretary Yellen made remarks about financial institutions conducting stress tests related to climate. Are you ready for the potential effects of climate change? And that's not really a new concept. That's not a brand new sentence or what have you, but sort of elevating that to the top of the public policy sphere is worth noting. She also said, almost as an aside, pardon me, that insurance regulators ought to take a look at that. So again, we're already seeing, we're really just early in the administration, a willingness to reach over and say, hey, let's push here, this is your authority, but you ought to think about coming with us for the ride. So obviously that climate issue relates to, as I mentioned, several different policymaking proposals or policymaking directions. NEIC has its own climate and resiliency task force. But again, what could we see as outputs from all that activity? I mean, one of them is disclosure, and there's an active work stream that Oregon is chairing that's looking at disclosure. There's disclosure issues internationally, disclosure issues, but I mean that's a constant discussion, right? Mm-hmm. Then the issue about stress tests, that's obviously a big deal. The potential for that. Also risk management. New York has been pushing hard on that, right? I mean, that New York wants to see climate showing up as a component of an entity or a group's risk management. And then at some point, is there a more direct regulatory component that's tied to that? I mean, we'll have to see all these things play out. But I think one of the fascinating things about climate is it's sort of a three-peat, right? How many different jurisdictions are dealing with it, how many different issues it touches, and how many different outputs there could be on the other end. When I say outputs, I mean impacts for the insurance industry.
Yeah, I think one of the main things I kind of think about when I think about this, and the Governor DeSantis has turned out to be a very pro-environmental governor for Florida. But I think that is not inconsistent with, look, quit arguing about whether you believe things or not. Change is inevitable, regardless of what you believe about how we got there or how we get there. It's a responsible stewardship of the environment that we should be seeking, right? From both sides of the aisle. Again, doesn't matter what you believe about all of that. You still have a responsibility to be good stewards of the environment. And to be very honest, I think we can do some things. And again, insurance data is one of those areas where we're talking about risk to our customer. And we're trying to help them navigate their own personal risk, whether it's for a company or whether it's on a personal level. And the more information that we can put toward them, and the more that we can contribute to the aggregate around how we help mitigate against risk and help some of these things that might not have been insurable. I mean, 25 years ago, I remember hearing, well, wind risk, we don't think it's insurable in the state of Florida, but we figured that out. And not to say it's affordable, but we've done some things and we've taken some measures, and all of a sudden there's a tolerance for that marketplace, right? You have the availability of reinsurance for wind in Florida. And as we kind of matured as a state, you start to see that kind of natural catastrophe across the United States with all sorts of different catastrophe exposures, whether it's flood, mudslide, hail, extreme cold, as we've seen over the last week. And so regardless of what you believe about the origins of this, the idea that insurance was meant to help a consumer mitigate against risk and to understand their risk and to put resources toward it, I think we can gain a lot by just trying to engage in the conversation and to give some insights on how we help our consumer. Because ultimately, that's what we want to do. We want a strong economy supported by good insurance products that leads to a bit of the sharing mentality or community mentality around the things that we do and the things we're protected against. We can all get behind that. And I think we should. So from I want to talk a little bit too about the racial justice impact and the things that we're going to see. Specifically, on that kind of that underwriting front, and some of the things that you're seeing from the impact from the federal government. What are some of how do we have a voice there? What's our role?
Sure. Well, it's obviously a big conversation. It's an important conversation on so many levels. And sort of starting with the federal activity, to no one's surprise, the Biden administration was early out of the gate to at least put markers down on racial equity as a priority. That was, before his swearing in, Biden had made that clear during the campaign. That's not anything that surprises anybody. But so put out a specific executive order on advancing racial equity and support for underserved communities through the federal government. At the same time, a memorandum on redressing the nation's and federal government's history of discriminatory housing practices and policies on the HUD side. So there are, already, again, starting out of the gate saying, these are issues that we are going to be looking at. Has not been any definitive activity on that front, but I think, to your point, Robin, where do we need to stay focused on the federal front? I think that's one of those areas where over time we're going to see the Federal Insurance Office weigh in. Not with any direct authority whatsoever, far from it, but just to weigh in. It would not shock me to see it as part of their annual reporting or some sort of a specific special report of one kind or another. That's to be determined. That's nowhere near activity on that. But I think we're going to see a lot of those pushes from the administration, and those aren't going to be obscure reports that are going to be sort of filed and off to the Indiana Jones warehouse, right? This is going to be things that I think that the Secretary of Treasury is going to end up talking about. The president may end up talking about. So I think that's something we need to be aware of. The battle lines right now, or the areas of discussion. Let's be more kind to us as a community. Not battle lines, but areas of discussion now are at the state level, right? So NCOIL, NAIC, individual states having really robust discussions about very, very important questions on, what constitutes discrimination, what constitutes proof of discrimination, what is going to happen next in terms of that policymaking. Obviously, I've rattled that off like it's some little thing. It's just a very, very big issue that a lot of smart and active and I think throughout, well-meaning, starting from a position of good faith, acknowledging this is an issue that we have to, as a human community, as a business community, attack head on. Now, what does that mean? What comes first, and how do we make sure that what happens is something that makes sense? So we're going to see that discussion happening over disparate impact as a question, over levels of proof. But again, to return from the federal front, as we look at that conversation and try to lay our hands on that conversation, there is going to be a federal component to it. And whether or not there's any direct regulatory authority, I think we can count on that. And as we see people move into these roles in terms of advocacy and education, we ought to take that into account and really play some offense. And industry should go out of its way to establish credibility with those actors, because they are going to have an impact that's maybe larger than their formal regulatory authority.
Yeah, I see. We were in the flood. We were doing a demo for some of the regulators on the distributed ledger technology. We've supported OpenIDL, and the flood working group, which consists of Cat Risk and RMS and us, obviously, we're talking about how they could actually start to use a tool like distributed ledger around data transparency, or transparency of how certain models are performing or other things are performing, so that it could actually look for and prove or disprove some disparate impact, especially around flood insurance, right? And quite frankly, that's an even bigger discussion, simply because flood insurance, it's one of those things where availability in and of itself, right? It's part of that whole, is this insurable discussion. So it has its first component of availability from the very beginning. And so data around the availability for private flood market to develop is one of those things. But as that private flood market develops, this is a great opportunity for the insurance industry to come forward and start supporting data standards and participations on networks like distributed ledgers, where they can actually get some transparency into how models are reacting, or certain rates are in a certain area, or lining up around, social justice issues. And they actually went through an example of an application they felt was totally developable on the distributed ledger technology to start to give some of those insights. I think it's very important for insurers to start thinking about, I agree, play offense, right? Start thinking about how you contribute to making sure that you're, that a regulator, whether it's the state or federal level, can see some of these activities and can see where we need to improve, but also that we're doing the right things as an industry. I don't see those two things as mutually exclusive, and I quite frankly think the FIO is going to start asking for more and more data elements, just like we see these data calls throughout the country from regulators to help them to understand really what's happening in the marketplace. And the current structures we have around data don't allow for that discussion to happen very, very freely. The traditional method of data collection for regulatory purposes is very, very dated. So working with states like North Dakota and Connecticut, Mississippi, New Jersey to work toward with the companies in a partnership to try to figure out, okay, how do we really give better transparency into this so that we're doing the right things, and so the insurance companies can have markers that they can really stand up and say, yeah, we've checked the stress test of ourselves, right? We've checked, we're doing the right things. And so I think that's really going to be important. We can fight about it for the next 4 years, or we can make a difference in how we approach the problem, which is not with the negativity, but with how do we help solve it in some partnerships. And I really believe in that. I'm going to switch gears just a little bit and let's talk a little bit about Congress. I know we talked about it at the first of the hour, that, they're kind of stuck on stimulus right now and COVID and how to react. But once they kind of steer through that, what do you think there's some of the activities we can look for in Congress? And I know I asked you specifically about, some of the differences from Mayor Karen Ferguson and the life insurance industry and some of the rule changes there. So what can we look for from Congress when we get beyond the COVID relief?
Well, as we got through, for a number of priorities, the answer may be, for better or for worse, not much. So that's per usual, right? We just rattled off a number of far-reaching priorities, right? Climate change, racial justice, and rebuilding the country's infrastructure. So not a lot of time left over, from if that's what you're trying to do for a living. So a few of the things I'll remark on, really, the status is we're not likely to see activity, or we're likely to see activity that's not going to result in legislation. But let's talk about that a little bit. So the big legislative hullabaloo as the Trump administration was ending was the repeal of the McCarran-Ferguson antitrust exemption as regards health insurance. So that repeal left in place a number of exemptions. I know that, again, are near and dear to your organization in terms of data, collectivizing loss development data, actuarial services. There's certain things that were left in place even in that repeal. Nevertheless, it took people by surprise, which doesn't happen that often in DC. It's not supposed to happen, that people are just learn about it in the newspaper. And then there's this, notion, maybe, I don't even know if it's a fear, but to what degree does that show, kind of break the seal on Karen Ferguson, and it's something that's could come up again. Could that migrate over to other industries? There's really no indication to date that there's an appetite for that, but it's certainly an interesting data point that legislation was able to get passed through Congress on such a critical issue and on such a fundamental issue, as one to the states as that sort of thing, right? But so again, an interesting data point, but not any evidence of any specific activity in that direction. You mentioned, Robin, the issue of insurability before. It's hard not to then take that dot over to the potential for some sort of a pandemic risk backstop, a PRIA, if you will, that would mirror a TRIA. During the pandemic, there were a few different proposals being floated. Only one of them made its way into legislation, Representative Mahoney's bill, that is, but there's been no activity in the Senate whatsoever on that. So there's the potential for that to come through the House. Representative Cleaver, who's the subcommittee on housing insurance chair within House Financial Services, has said he wants to do a backstop. He has said he will do it on party line, but that doesn't solve the Senate issue. It just hasn't been able to get any traction in the Senate. So it's hard to score that as something that has the potential to get through. Sitting there we are right now, but I think there'll be a lot of energy around it when the time comes, and maybe maybe that's something that will get we'll get up to the top of the agenda when in calmer times. And I know that AAIS and property casualty industry has a lot of interest in the direction of flood. It's somewhat of the same report. I think since the mid 2010s, it's been these temporary reauthorizations have not been able to do a comprehensive reauthorization. Sitting here today, there's an awful lot of new data that's expected. So something that's holding things up, or that has the potential to hold things up. But candidly, there's not a lot of optimism that in the next year we're going to see a comprehensive rewrite. But it's something that I think people are looking at, and maybe again we can get enough energy around to change the current course, which is probably veering more towards a temporary reauthorization.
Yeah. Let's turn to something that kind of really didn't lose a whole lot of, I think, traction during the 4 years of the Trump administration is the steam toward legalization of cannabis. Where do you see that in the federal process right now? Well,
on the more hopeful notes than the last two, so I'm glad we moved over to it. So there's the Safe Banking Act is something that has bipartisan support. That actually can happen, and this is the topic that got it. It would really create a safe harbor for financial services companies that deal with state legal, that is to say, legal marijuana business, legal at the state level business. And so that seems to be somewhat of a game changer. There's certain barriers, there's certain maybe even psychological barriers that I think that will help break through. At the state level, I don't want to say every day, but boy, it's happening often. New Jersey just signed comprehensive adult use bill. So that horse is out of the barn, and I think there's a recognition in Congress that that's the case. And as we see more activity like the Safe Banking Act, as we see more activity like more and more states, where the patchwork of states is leaning more and more towards legalization in one form or another, then I think there's going to be increasing comfort in the industry for coverage. I think to some degree, to those that were a little hesitant or not wanting to necessarily be first out of the gate, I think these are some of the things that people were waiting for, and they appear to be happening. Even in today's kind of rock'em sock'em political environment, there are things that are gaining increasing bipartisan support.
Yeah, we kind of bet on that horse out of the gate, in the sense that we created the first. In fact, in response to requests from the California Department asking us, we'd really like to have an admitted product for all of these cannabis related businesses, and so that's when we started with our development of the Cannabop, which is business owners policy for cannabis growers, but not growers, but distributors really. But that's extending into our agricultural products and to our other lines of business, because we do think that that's going to be an area that even the more conservative of the insurance industry can start to move toward having an admitted product. We want those businesses insured. If they're here to stay and we're going to have them as part of this economy we support, right, we have to have products that support the industry as a whole, and responsibly allow them to have businesses in their respective states. So I think that's, regardless of what another one of those, regardless of where you fall on the, belief of the matter being good, bad, or indifferent, it's going to be a need that our industry is going to have to answer to, and whether we take the approach of it's excluded, there's going to be people who will be happy to write coverage. And I think that's going to be a market that's going to be hard to ignore, especially in small business area of recovery over the next few years. So we're getting close to the end of time, and I'm going to give you the floor to kind of give us your look ahead, right? What do you think, the world according to Pat, what do you think we're going to see here in 2020, the end of 2021? We're already talking about that. It's March, crazy.
Yeah.
But even further than that into 2022 and some of the dynamics around the election cycles.
Sure, happy to. Although I think, folks who don't follow government for a living, who are fortunate that, roll their eyes when we start talking about 2022 and 2024 already. Didn't we just get through an election that, needless to say, was, let's just say, exciting enough for most people's taste, and all true. However, the reality is that especially for some of these big races, the planning starts immediately. When the last balloons drop on election night, as it were. So looking ahead to 2022, we see, again, sort of starting from the place of the acknowledgement that, on the state level, there was a real Republican strength. And so talking about the governors, first, that's a big year for state elections. So, right, there's a cycle, 4-year cycle, and in 2022 is where we have the vast majority of state governors races. A lot of those were close. We mentioned these before, but what are the ones that are really going to be the most interesting? Hard to tell at this point, but Wisconsin, flip state, raised within margin. Georgia, does Stacey Abrams get back in the race? Obviously, that's a game changer in terms of prognosticating. Does the governor get primaried from the right? I mean, that's a possibility. We all know that that's theoretical possibility. Some of these swing states, very low margins, right? Ohio just under 4%, Iowa just under 3%. Now, again, these folks are now incumbents, so that's a little bit of a game changer. But you can't look at those numbers and not think, is there something there? Could the right candidate, take that on? Even South Dakota is interesting, right? Kristen Helm said it was a 3.4% race, and she may be on to do other things. So there's so much interesting happening at the governor's level. It's going to be very interesting to watch. And a lot of those states I just rattled off are very high impact in terms of their insurance domestic base. On the federal front, the House is now very closer than Democrats were hoping, right? 221 to 210. There's a few Democrats that are abandoning their seats to join the administration. So that already creates some vacancy. And we've got a new dynamic because Pelosi will not run for Speaker next Congress, at least according to her, the sort of the game plan that was laid out. On the Senate side, Republicans have a lot of retiring incumbents: North Carolina, Ohio, Pennsylvania, and Alabama. That's a scenario that, again, starting knowing nothing else than that, that's something where Democrats look at, as a favorable situation. And more importantly, no Democratic senator is running for re-election in states that were won by Trump. And so I think Democrats feel there's opportunity in the Senate. Probably the most important thing that we can say in any sort of prognosticating, which I have not been doing, these are just potential scenarios, is when will we learn that it really doesn't have a value and almost no value? We can play out different scenarios, but the reality is, everybody thought that the Democrats were going to win the Senate in November, and quote unquote everybody, and then everybody thought that Republicans were going to hold on to one or both Georgia seats, keeping Republican control. And of course, neither of those scenarios played out, and yet here we are again, looking forward to see what's coming up next. But nevertheless, Robin, I think on both the federal and the state level, there's no shortage of interesting races and no shortage of real direct impact to the insurance industry and its stakeholders.
Right. I think the same thing. And again, sometimes trying to guess, what the next thing is going to be. Let's just concentrate on what we can make better today. And I like the idea that there is now a little bit more of a centrist You've got those centrists in Congress that probably will control some of the direction we take. That's probably a good thing. I once had a manager that in state government that said gridlock is good. It means we get a little more predictability and can kind of just do our jobs for a little while. And so we're delighted to have you on today and to talk about these issues. You are extraordinarily knowledgeable. I always love talking to you. Thanks for joining us today, Pat.
Oh, it was my pleasure, and really enjoyable talking about these things and sharing perspectives. Really happy to be part of it.
So stick around, folks. We had a great session with Pat, and we'll have a great session here at the next top of the hour with our own Vice President of Engagement, Truman Esmond, joining him from some folks from the Travelers, as well as the Director of the Hyperledger Project for Linux. We look forward to hearing from you guys at the top of the hour. See you then.